Hello, this is Darren Hudson. I wanted to thank Sam and the TAWC team for inviting me to be here at the Water College virtually. Hopefully, one day we will be returning to normal operations. But I wanted to spend a little time talking to you today, not about water directly, but about agriculture and sort of a retrospective on the past year now that we're entering year two of the pandemic, and to think a little bit about what we've been through, what agriculture has done, what it's not done, and some of the issues or lessons that we've probably learned or need to learn here to help improve our ability in agriculture to address and deal with future pandemics. So, again, thinking back on the past year, 2020 is really the gift that keeps on giving. We of course had the pandemic. We had no summer sports. We had the lockdown, not lockdown, wear a mask, don't wear a mask. We even lost Mac Davis here in Lubbock. And then we've had elections and chaos that have ensued as a result of some of that stuff going on. Well, all of this has had fairly substantial impacts on global food markets, and local food markets are not not any different here. So we all remember sort of the panic buying or the stockouts that we saw at the beginning of this. As everybody sort of rushed when we had the initial lockdowns, the jokes about the toilet paper, everything that happened, in that run up to our first set of lockdowns, and we talked about panic buying and things like that. Well, what that did was sort of reveal some issues with supply chains that drove a lot of perception. So people, saw empty shelves, they panicked, and then the moment that the shelves started to refill, they would panic and make sure they were buying. I can remember driving out of a Costco parking lot, seeing a person with probably 200 or 300 pounds of meat that they were putting in the back of their vehicle. There were some legitimate concerns about the supply chains, as we'll talk about in a minute, and some lessons that we probably need to learn. And the COVID-19 continues to have sort of implications for local agriculture here and in other rural areas. And there are some things that I think that we need to think about going forward as a result of this that we may need to look at. Well, one of the things that people always ask is, what is a supply chain? When we talk about supply chains, that sounds like a fancy term. Well, supply chain is just how a product moves from you all that produce food to the final consumer. Now, in general, food can flow through lots of different channels, and they're going to be transformed along the way. I'm showing examples of a poultry farm here. Well, you can move chicken through lots of different channels, and those different channels then reach the final consumer in a coordinated fashion. So we can have contracts or integration, or it can be relatively independent. Most food chains are increasingly integrated, as we'll see in a minute, but and that has implications. Each of those will have their own strengths, their own weaknesses, and alternative forms. And it's the risk associated with, say, a pandemic at each one of these points that we need to evaluate. Well, as I mentioned, there's an integrated supply chain as we talk about in the business world, and it's really a single or a small supply chain, usually a company. So if we think about Tyson, for example, or Sanderson Farms, they're integrated contractually all the way back to the poultry farm. Most farmers in West Texas are not integrated in this way, but many of you and many farmers in the area do have contractual arrangements to grow seed, or maybe you're growing a particular type of corn for a processor. The advantages of that integrated chain is it does improve things like food safety. It reduces the supply risk to the retailer because now there's a contractual obligation through this supply chain to supply that food. And it minimizes what we call transactions costs, which are just costs of doing business, negotiating contracts, monitoring and enforcing contracts, those sorts of things. When you're integrated, it reduces those costs because you don't have to go out on a daily basis. So I always tell people, if you were Kentucky Fried Chicken or Chick-fil-A, you had to go out every day and find the correct size of a broiler in order to fit on your bun and that sort of thing, it would be extremely expensive. So these integrated supply chains reduce those costs. Well, once you have a disruption in a chain, it can create problems for other members of the chain, and that's sort of the concern here. So again, we had the development over time of these things kind of like just-in-time delivery. That's the acronym that's often used, or the description that's often used. And it's a great process because it reduces the need to store things. So when we think about just-in-time delivery, if you go to a Walmart or a grocery store, they don't have much of a storage room. They have some cold storage and things like that. But for the most part, stuff comes off the truck and goes on the shelf. And it's ordered as things are being purchased. It's replacing those orders, or replacing that content in a real-time basis. And so, because it reduces the storage, it's reducing food waste. There are other economies that are associated with this. And so it's very popular in supply chains because of that. But there's no slack in this system, or very little slack in these types of systems. So the ability to absorb a supply shock or a demand shock in a system like this, especially of the magnitude that we talked about at the beginning of COVID, it just stretched those supply chains pretty thin. Not that it broke them, but it certainly stretched them. I think it's important for us to remember, when we think about food, is that we really have two parallel supply chains operating at the same time. On the one hand, we have food service, or restaurants, institutional things like hospitals, the military, all those industrial consumers of food and food preparation. And then we have what we typically think of the food is our retail groceries. So when we go to the grocery store, that food supply chain. Now those are different, okay? And so that's what I'm going to talk about here for a bit. Is this difference is important. So if we think about the two supply chains, about half of all food in the United States prior to the pandemic was food consumed away from home, and that spread there, was a function of a lot of things. For example, it's more economical for person who makes a lot of money to consume, use that time that they have making money as opposed to preparing food. And so, there were a lot of economic reasons for why this evolution occurred since, the 1960s. But it changed dramatically, as we'll see in a minute. And what I mean by, why this is important, when we think about that parallel supply chain, I've got an example here. You've got a pork producer, and that pork producer, sends that to the processor to make bacon. Well, that bacon can go in two pathways. One of them is the retail grocery, so you see the small scale packaging that is used, the labeling, all that sort of stuff that has to exist. And then in the restaurant food service sector, labeling requirements are not as stringent. You don't have all of the nutritional information, all that sort of stuff on there, and the packaging tends to be much larger. It's designed for having mass amounts of, say, bacon delivered to a restaurant. but that disappeared. Okay, so at the end, in COVID, when we shut down the restaurants and we locked down, that side of the supply chain just disappeared overnight. And so when we think about how pork was moving through the system, or beef, or poultry, or anything is moving through the system, those things that were heavily dependent on industrial services, that had contracts and things like that, that had their processing systems set up to deliver that product, all of a sudden that disappears. And you can see this sort of, visually here, and this represents, from 2015 to 2020, the real expenditures in millions of dollars on food at home and away from home. So you can see that it hovered around an even split up to when the pandemic started. And you can see that huge drop in food away from home as a result of the lockdowns and the increase in the food at home that occurred. Now you notice that there's not a huge surge in the food at home, even though the value went up some. Part of that is because the food away from home includes the value of services that are happening there. So when you walk away and you replace a steak eaten at home with a steak eaten at a restaurant, the expenditure on the steak eaten at the restaurant is much higher than it is at home. So there's a much bigger impact on expenditures. But the bottom line here is that really dramatic shift in consumption drove that shift or that movement to food away from food at home or food away from home, which dramatically changed those supply chains. Okay, and that's sort of the major point. So when you can't just move all of that pork that was going to restaurants now suddenly to the retail supply chain. There are difficulties, right? One of them is packaging, as we talked about. So nobody's going to buy a 20-pound box of bacon. Well, I might, but most people aren't going to buy a 20-pound box of bacon. And so that the bulk packaged goods aren't conducive to the retail sales that are likely to happen. You have labeling restrictions. So, regulations on content labels. Those don't apply to food service universally in the same way that they do to the retail sector. So repackaging with proper labeling and that sort of thing would take time. Or you would have to have a waiver of those regulations. And of course, timing is a big one, right? Because, both of those supply chains, or at least some portion of them, are perishable. So you can't, the time that it takes to switch between those two could result, or would result, and did result in significant food losses, spoilage, other contamination, that sort of thing. We saw some creativity, right, in terms of this. We saw restaurants, even in our local market here in Lubbock, that were packaging up food boxes and selling those food boxes as a way to keep their contracts or keep from reneging on their contracts of purchasing food. They were purchasing that food and then moving it on to consumers in the form of food boxes purchased. But that didn't happen immediately. It happened over time as restaurants figured out how they might be able to do that. But those rigidities sort of prevented the mass crossover. I mean, eggs was a big one. We saw in the egg market, this huge rise in retail egg prices. It was like 300, 400% rise in retail egg prices at the store. And that's because the what they call the breaking eggs, or the eggs used in food service industry, weren't allowed to move into the retail sector because of that packaging and labeling. Well, FDA actually created a waiver fairly quickly in this process and allowed those things to be moved in. That really dramatically reduced that retail price spike for eggs in a very short period of time. And that's an example of the kind of things that had to happen. But what we did see were product destruction. The picture here is farmers disposing of excess milk because you just can't turn the cows off. That was one of the major problems that happened in the short run. In the longer run, people were able to adapt and start making alternative products. The packaging labeling issues have been sorted out, and so that the market stabilized. It stabilized fairly quickly after these issues were recognized in the short run. Another issue is farm labor. It's important for our area, but obviously it's massively important for California and other places that grow fresh fruits and vegetables. You had a couple of things that were going on. One of them was that borders were essentially shut down, and so the normal movement of migrant labor back and forth across the border was stymied for some time. And then you had sickness in the supply chain, in the labor supply that impacted the supply chains for things like perishable crops. It also impacted things like, beef or meat processing. We saw huge plant closures. We saw those sorts of things. There was some expansion of the HCUA program that helped alleviate some of this in the short run, but that doesn't answer the longer term questions about health and safety of line workers in slaughter plants, nor does it answer the question about health and safety of field workers. And so, we're going to have to address that as an issue. So longer term, some lessons that we learned, I think, so far. One is that we need more flex in the food system so that we can cross over between supply chains. And that's going to be a regulatory issue. It's something that we're going to have to look at in terms of the ability to move those things quickly between the supply chains. We're going to have to look at packaging issues, things like that. But those are all going to be regulatory issues. There's a lot of talk about it at this point. Not sure where we're going to go, where we're going to end up. I think there's a lot of rigidity and sort of what we call siloing between the two supply chains and the regulators that regulate those two supply chains. That has to be broken down. We have to think about maintaining some excess capacity. That's costly. Okay, so having excess capacity in the system adds cost to the system, and the only way that we can address, pandemics more quickly or other events more quickly is having that excess capacity, being able to ramp up, production and processing on an as-needed basis. But that's a costly thing, and we have to remember that, firms don't act sort of in concert. So you can't expect one firm to maintain excess capacity and cost more. Other firms will come in and try to undercut that to lower that cost to the consumer. So at the end of the day, this becomes a consumer issue. Are they or are they not willing to pay that added cost? There is some issues about automation. The meat processing facilities, as they modernize, will likely increase the amount of automation. It will, help alleviate the risk of labor shortages. In the short run, if you don't have that automation, those acute shortages like we had will drive up wage rates, and it's going to add cost to production. Automation will help alleviate that, but that's an evolutionary process that has to occur in the market, not just because of this. And then are consumers going to rethink food demand? Are we going to eat more at home? Do we prep more for emergencies? Do we, these are all dynamics that, haven't played out. That previous graph I showed you shows that as the economies have opened up some, there's been some return to food away from home. I would expect that to continue. I don't know if it'll go back to where it was, but my sense is that it has to get somewhere close to it unless the underlying economics of people's wage rates and jobs change. So people ate away from home for economic reasons. Unless those economic reasons change, once the policies go back to where we were, then consumers go back to doing that. There's some indication that there probably will be more eating at home. Consumers have learned how to do that and have probably learned how to economize a little bit. But certainly, I don't expect that we're going to see sort of wholesale changes in the way people eat food simply because of this. There'll be some modifications, but not completely. All right. So thinking about livestock pricing. I don't want to spend a lot of time on this, but livestock pricing. You see the blue and the red line showed cattle and hog prices or percent change in the slaughter. You see the price spread. It's convenient to say or popular, if you will, to say, well, live cattle prices stayed relatively flat. Retail prices went through the roof. Retailers were really raking people over the coals. And the truth is, there's probably to some extent there's issues with concentration in livestock markets that causes some concern. I don't know that that's what's driving this. What was driving this was simply that because we had disruptions in cattle processing, cattle prices stayed relatively flat, which is actually kind of a good thing in the sense that it didn't drive cattle prices down to nothing. As a result of this, they stayed relatively flat. What was happening is the restriction in supply at the retail level was causing retail prices to rise. And so as beef processors had to slow down or shut down, it caused more of an impact on the consumer than it actually did on the beef processor. And again, thinking about price spreads, this is an unprecedented event. So, I've marked two here. There's the beef ban. In imports from Brazil. There's when we had the big Tyson plant fire, and then plant shutdowns. And so the price spreads have returned back to a normal area over time. Recently, spreads in general have kind of grown through time, which is much more of the longer run concentration concern. But the short run event that happened, I think, had more to do with the constriction in supply than it did any sort of collusionary action or anything like that. Just to look at a couple of markets here, just so we sense, this is cotton markets. This is the December 21 contract. And we see, obviously all the commodity prices fell off pretty hard right at the beginning of the pandemic and has basically steadily increased since then. Corn looks very similar. We see that sort of thing happening. Markets are rising in part because of fundamentals. Okay, China's purchasing more, but it's still way behind on its phase one commitments. There are some potential supply issues, especially for grains, but cotton as well in South America. And then as we look forward, La Nina has potential impacts on deeper, longer droughts in North America. Not good news for this part of the world, but it certainly is playing heavy on the market and thinking about what might be available in the future. Markets are also responding to lots of free cash. As the Federal Reserve has pumped cash into the system, there's lots of this free cash that's looking for a home and a rate of return. And so, commodity markets are a convenient place to do that. So don't get too caught up in the prices being high, but if you've got an opportunity to lock some of these prices in, I'd do it. That's sort of the moral of the story. So looking forward for 2021, sorghum cotton price ratios, corn cotton price ratios, don't favor cotton as much as it does say sorghum. Again, this has implications for water consumption, things like that. But certainly, these dynamics can change as we're in the insurance discovery period right now. We now know we're going to have a Biden administration, and we suspect that they're probably going to approach payments somewhat differently. I don't think they're, going to see wholesale changes. The Biden administration has already alluded to being, sort of amenable to continuing down the path that they're on. We know that there's different leadership on the House Ag Committee, but the new chair is from Georgia, not unfamiliar with agriculture. In most circles, is viewed as being friendly to agriculture and willing to work with the ag industry. The Senate Ag obviously is switching. but we know what that leadership looks like. This Stabenow is not not new to the game, so we kind of know how that's going to shake out, and it's not going to be probably radically different than where we are. The big thing here is that the CFAP, MFP payment programs are just not politically or economically sustainable. We're not going to be able to continue this. And this cash flowing into agriculture is not really good for agriculture in the long run. I mean, I know that's probably not popular with people who are looking at those checks, but the problem is that money just gets capitalized into things and drives up costs. And it's in the long run, this isn't good. We would be better off having good solid markets, obviously. Now it does indicate when we look at this in the short run, indications are more money's coming in coronavirus relief legislation. So I think this isn't going away anytime soon, but I think people need to be cognizant of the fact that the outside world is looking at this. I'll give you an illustration in a moment. Look for renewed focus on China and their import commitments and new trade deals. The Biden administration is probably going to pursue trade deals as much as they can. But the one thing that we've learned in this process, going into 2021, is that the U.S. food system is really resilient to large shocks. I think that's a fact that we can all be proud of. Merchants, traders, processors, farmers, input suppliers. This was probably the largest shock that our system has ever absorbed, at least since the Great Depression, but probably in terms of the acuteness of the shock, even more so than that. So I think it's something that we should all be happy with its performance in that short run. Even before the government was involved, agriculture was performing quite well. And I mentioned to you, this is what I'm talking about. This is off of Twitter. These are, some commentators. I blacked them out so they don't get hate mail. But, the top commentator says, yeah, I'd prefer you pay for your own improvements to your private land, and we'll regulate you until you move off or let somebody else do it. And then the response was, I'm trying to start the let's spend $50 billion per year on the conservation title and zero on crop insurance caucus. This comes from the graph on the right. When we look at net farm income being higher than it has in a long time, and a chunk of that coming from government payments, it becomes harder and harder to rationalize to the outside world why government programs exist or why we should be investing in these things. We all know in preaching to the choir what this is about, but the outside world is a lot different. So with that, I will stop, open it up for questions. I really appreciate the opportunity and the time that TAWC has given me. I hope you all have a great 2021, great successful crop year, and make it profitable. Thank you.